Hi. So tonight for late night tax talk, the topic is deciding on a business structure. Tonight's topic is deciding on a business structure. I am Audra Wilson Russell, the owner of WATS CPA firm, and I specialize in accounting, bookkeeping, tax preparation, and advisory services for small businesses. I work primarily with childcare centers, but I also work with other businesses as well. All right, so just to give a little bit of background on what's going on here, I always get the question for newbies starting out wanting to know what steps they need to take to structure their business and, get on the right track. So this is part of a series or a roadmap that I created, a small business roadmap that takes you from A to Z of what are the steps to getting set up, to managing, and to growing the business. And tonight we're within that startup phase, and we're talking about just deciding on the business structure as one of those steps to take within the roadmap. Okay, so deciding on a business structure. There's different structures. You hear sole proprietor, partnership, C Corp, S Corp, LLC. We're going to talk about all of it and what it means from a tax perspective. I will say that you may also need to consult your attorney from a legal perspective. So the advice that I'm giving you tonight is more so about the tax ramifications of deciding on a structure and not the legal ramifications of deciding on a business structure. So definitely reach out to an attorney to consult with them in that regards. Okay, so let's jump into the different structures and see what they mean. The first one is the sole proprietor or the single member LLC. So as a sole proprietor, if you're not incorporated at all, you're just out there doing business under your personal name, then you are automatically categorized as a sole proprietor. If you do incorporate your business and register as an LLC and you are the sole member of that LLC, then you're taxed the same way. The only difference there is for legal reasons, but for tax purposes, it's the exact same thing. So let's go through what that means from a tax standpoint. Your taxes, you will file on your personal 1040 tax return, and the business income and expenses you will file on the Schedule C, and that's your profit and loss from your business. So keep in mind that there isn't an additional tax return that you would need to file. It's just an additional schedule to your already personal tax return Form 1040. Your legal status. So an LLC is what's called a disregarded entity, which means that it's not an entity separate from yourself. It is you and you are it pretty much when it comes to taxes. So all of your net profits from that small business will filter down or trickle down onto the front page of your tax return, and you're taxed at whatever your individual tax rate is. So if you fall within the 10%, 12%, 24% tax bracket, then that's what your net profits will be taxed at. So it's not a separate return, it's all on your personal tax return. You also get to pay what's called self-employment taxes when you have a sole proprietor or LLC. And so what that self-employment taxes is, I want you to think back to when you are an employee and you receive a W-2. On that W-2, there's 3 buckets of taxes that are being taken out, right, of your check each month. You have your Social Security, your Medicare, and your federal income tax. Those are the 3 tax buckets. 2 of those buckets, your employer matches what's taken out of your check and send that to the IRS. So the Social Security and the Medicare is what what you have deducted, your employer is matching that same amount and sending it to the IRS. So there's two buckets: employee portion, employer portion. When you are self-employed, you are the employee and the employer. So those two buckets together for Social Security and Medicare taxes, which is about 15.3% of your net profit, you get to pay both buckets, the employee and the employer portion. And together that makes up your self-employment taxes of about 15.3%. You do get to deduct half of that as part of the above the line tax deduction, as part of paying that as an expense as an employer. But roughly it's probably about 12 and some change percent that you can see as an increase to your taxes for self-employment taxes. For payroll, when you are a sole proprietor or an LLC, you are restricted from taking a payroll unless you are treated as an S corporation, and we'll come down to that in just a minute. Okay, so now the partnership or the multi-member LLC. So with the partnership, by definition of a partnership, it's two or more people. So your default category of an LLC that may have two or more members, by default, you're going to be classified as a partnership unless you elect to be treated as otherwise for federal tax purposes. The form that's used for partnerships is Form 1065. So you will see that this is a separate tax return that you would have to file in addition to your normal personal tax return, Form 1040. Now, this entity is a separate entity from the owner, hence the reason why you have to file a tax return for the business itself. The net profits are taxed at the individual level, and that's through what's called a K-1. So when you have a partnership, you receive a K-1 that shows your net profit from that business. You use that K-1 to file with your personal tax return to kind of figure out what your taxes are going to be. If you're a general partner, which means you have control and some other kind of rights, you also have to pay self-employment taxes. If you're a limited partner and you're not that involved in the business and some other kind of control structures there, then you may not be you may not have to pay that self-employment taxes. But if this is definitely your business and you're active in it, you're a general partner, you're going to pay that self-employment taxes on it. Again, for payroll purposes, if you're just an LLC or partnership, then that payroll is restricted, meaning you cannot put yourself on payroll. So now heading over to the S corporation. On the S corporation, what the S is for is a small corporation, right? So instead of filing the more complicated C corporation, the IRS will allow for you to elect to be treated as an S corporation. So whether you're an LLC, sole proprietor, or if you are a multi-member LLC partnership, you can take an election to get permission from the IRS to be treated as an S corporation. There are some tax benefits to doing so. On this one, you would file a 1120S. So the S for S corporation. This is also a separate legal entity. So you would file a return for this company as well as a personal tax return. Same as the partnership, you'll receive a K-1 for all of your net profits. And that K-1 is put onto your personal tax return, and then you're taxed on the net profits there. One of the advantages of having an S Corp over just a regular LLC is the fact that the S Corporation does not have self-employment taxes. So that 15.3% of your income is not taxed when you are an S Corp. But what you are required to do is take what's called a reasonable compensation. So the IRS mandate that you take payroll, like put yourself on actual payroll where you receive a W-2, you have your Social Security withheld, your Medicare withheld, and your federal income taxes withheld, and filing your quarterly payroll tax returns each quarter. So there is that payroll requirement, but there's a fine line of how much you can take out via payroll and how much you can take out as a distribution. So with the LLC, your entire amount is your entire self-employment taxes is at that 15.3, but on the S corporation side, you can pretty much reduce the amount of taxes that you are paying each year when you don't have that self-employment tax requirement. Okay, and then we have the C corporation. Now, with the regular C corporation, like I said, it's a little bit more complicated. It takes a lot more compliance, and this is filed on Form 1120. It's a separate entity from the owners, and it's taxed at the corporate level. So on this one, you're not receiving a K-1 to put on your personal tax return. This type of entity files its own taxes and pays its own taxes. Right now, the current rate is 21%. So 21% of the net profits is what you would owe in taxes for this type of entity. If you have shareholders that are taking money out of the company in the form of a dividend, then that dividend is taxed at the individual level. So there you have the double taxation, because you're already being taxed on it as income through the corporation, and then you're getting taxed on it again as a dividend you're taking from the corporation. Payroll, the shareholders, in order to run payroll through a C corporation, the shareholders would need to be put on payroll and receive their wages for services rendered to this corporation under a W-2, so just running payroll. So if you need assistance in deciding on a business structure that's for you and your business, head over to wats.biz/appointment and book that consultation, the video consultation, and we can make a choice, help you decide what's better for your business. If you already have your business structure and you want to discuss some payroll options, or maybe converting from a sole proprietor or partnership into an S corporation, then definitely go ahead, click on that link to book the appointment so that we can help you in making that decision. Thank you again for watching the video. Leave any comments or questions in the link in the comment section, and I'll be sure to answer those as I can. Thank you.